Welcome to Concall Decoder, where we break down the jargon of earnings calls into everyday language.
Hey Nick, I tuned into a company's earnings call yesterday, and honestly, half the words flew right over my head. They kept throwing around top line, bottom line, EBITDA, margins. I was completely lost.
That's completely normal. Concall language can feel like a secret code. Today, let's start with 5 essential terms every investor must know before listening to a Concall. Top line, bottom line, EBITDA, margins, and guidance. Let's start with top line. Top line simply means a company's revenue, its total sales. Think of it as the very first big number at the top of a financial statement.
So if a company says its top line grew 10% year on year, that means sales went up 10% compared to last year?
Exactly. For example, imagine a smartphone company sold 100 crore worth of phones last year and now sells 110 crore. That 10% increase is top-line growth. But remember, higher sales don't always mean higher profits. Costs matter too.
Got it. So top line is about sales power. What's next?
Next is bottom line. That's the net profit, the final number after subtracting all expenses, interest, and taxes. It literally sits at the bottom of the income statement.
So top line is sales, and bottom line is what's left after paying everyone?
Exactly. Think of it like your monthly salary. Your top line is your gross salary, and your bottom line is the money that actually lands in your bank account after tax deductions, rent, and bills. Investors love bottom line growth, but they also look at the balance between top line and bottom line.
Makes sense. But then companies keep saying EBITDA. What's that about?
EBITDA stands for earnings before interest, taxes, depreciation, and amortization. Basically, it shows how much profit a company makes from its core operations, without considering financing costs or accounting adjustments.
That's a mouthful. Why not just look at net profit?
Good question. Net profit is important, but it can get distorted by things like high debt or non-cash expenses like depreciation. EBITDA strips all that out so you see the true performance of the business itself. For instance, when comparing two companies in the same industry, EBITDA is often a fairer benchmark than net profit.
So if Company A and Company B both sell laptops, EBITDA tells me who runs the business more efficiently, right?
Exactly. That's why analysts focus so much on it. Now, let's talk about margins. Margins show profitability as a percentage. Say a company makes 100 rupees in sales and keeps 20 rupees as profit. That's a 20% margin.
So higher margins mean a company keeps more of its sales as profit?
Exactly. And there are many types: gross margin, operating margin, and net margin. Each one tells you something different. For example, if raw material costs rise, gross margin might shrink, even if sales look good.
Oh, so margins tell the story behind the numbers. Sales alone can be misleading.
Right. Finally, let's look at guidance. Guidance is when company management tells investors what they expect for the future, like revenue growth, profit outlook, or demand trends. Think of it as the company's roadmap.
So it's like a sneak peek into what they think will happen?
Yes, but be careful. Guidance is only a projection. For example, a tech company may guide for 20% growth, but if the market slows or competition rises, actual results may differ. Investors watch if companies meet, beat, or miss their guidance.
I see. So top line, bottom line, EBITDA, margins, and guidance together give me a 360-degree view of a company.
Perfectly summarized. When you listen to an earnings call next time, focus on these 5 terms and how they move together. That's how professionals decode concalls.
Thanks, Nick. This conversation really helped me. I think I'll re-listen to yesterday's call with these terms in mind.
That's the spirit. And remember, this is episode 1 of Concall Decoder. In future episodes, we'll keep decoding more financial jargon step by step. Disclaimer: this podcast is for informational purposes only and does not constitute financial advice. Always do your own research or consult a professional before making investment decisions.